My name is Jake, welcome to the channel. In today's video, I want to share with everybody how I analyze dividend growth ETFs. I get asked all the time here on the channel if I think a individual ETF or stock is a good choice, or hey Jake, would you recommend this ETF? And I want to share with everybody how I go about analyzing ETFs for my own individual portfolio. For those of you that are new to the channel or you're tuning in for the first time, first off, welcome. I talk about dividend growth investing in every single video. And I just was looking at my about section in my channel here on YouTube, and I just realized that, I just had my 1 year anniversary, I guess you could say, here on YouTube. I cannot believe how fast the time has gone by. And, as it states here in the description, the reason why I created this channel was to help new investors or beginner investors learn about dividend growth investing and really about how to effectively and efficiently grow an additional stream of income or cash flow through dividend growth investing. And I've been very transparent. I've been, in every single video, I've really kept in mind, okay, the audience that is viewing my videos or, watching the videos are typically between the ages of, around 20 and 45. I know there's some outliers in both directions. I get emails from individuals that are 18. Most recently, I got an email from an individual that was 13 years old. I was so surprised that, I just wish if I could go back into my time machine when I was in my early, 20s, if I could change some things up. But really, the reason why I created this channel was to help other people. I didn't do it so that I could sell a course, so that I could create additional income. I mean, through the channel here on YouTube, I'm a small YouTuber. I don't even have 10,000 subscribers. I don't sell a course. I don't really blow up on affiliate marketing. The only thing that I do is I share a link to M1 Finance. If you do want to sign up, you can use the link. It does help support me. So I really do appreciate that. I really appreciate it for everybody that has done that, but it's not something that I really push. And so, in reflecting for this video, with being 1 year at doing this fairly consistently over the last 6 months, I've uploaded a weekly video every single week. And I just am really, really happy that I'm able to stay consistent and do this. And I've really enjoyed it. And I hope the content that I'm providing is valuable, that it's beneficial for you. I'm not the flashiest YouTuber, right? The content that I'm generating or creating is really for those that are interested in growing cash flows from investing and really like that are want to do it themselves. Like that's really the purpose of my videos, is to help individuals learn how they can invest themselves. So in today's video, I want to share with everybody how I analyze ETFs and what criteria I'm looking for when selecting the ETFs from my portfolio. And so what I'm going to do is I'm going to go through, the process of how I screen different ETFs, the different components that I'm looking for in a good ETF. Also, towards the end of the video, what I'm going to do is I'm going to review the performance of a few ETFs, kind of benchmark, all right, if I were to, have these three ETFs on my radar, which one would I select? And based off of what criteria? All right, so let's first start off by looking at, what kind of screeners you can look to select or kind of screen through different ETFs. So one of the options that I use quite frequently is here through M1 Finance. What you can do is if you have M1 Finance, and if you don't have M1 Finance, okay, I'm going to show other ways that you can do it. But with M1 Finance, what you can do is you can go into the research tab, and you can go under funds. You can do the exact same thing with individual stocks, right? You can do a screener with stocks, but with ETFs, you can do it here. And so when I'm screening ETFs, there's a few things that I'm looking for. And really the goal here is I want to make this as simple as possible. I want your everyday Joe to be able to watch this video and feel comfortable after the video to know exactly what he or she should be doing in terms of, okay, what do I need to be looking for when I'm looking to add an ETF to my portfolio. So the very first thing that I do is I look at assets under management. I want to understand, okay, how well established is this ETF? Is this ETF brand new? Has it been around for a while? Is it from a company or a brand, right? A company that I know of, like Vanguard, BlackRock, iShares, or Invesco, those kind of things, Spider. So the first thing that I do is I look at the assets under management. The next thing that I look at in here with M1 Finance is I look at the dividend yield. Okay, well, the dividend yield is important because the dividend yield, the thing is with new investors, typically what new investors do is when they're looking for a screener, and I'll be honest, everybody, I did this as well, right? I did this as well. When I was first learning about dividend investing, the first thing that I did was, okay, I got a dividend screener. I'm gonna look at the highest dividend, right? Okay, well, this looks like a really high dividend. That probably means that's the best investment, right? This is the best ETF because it has the highest dividend yield. Sadly, that's not the case. This is where you fall into the yield trap. And I've shared other videos on things that I've learned. For example, I shared a video on what things that I learned in 2019, and avoiding the yield trap was absolutely on that list. So this is what you do not want to do. I mean, I can make an entire video of things not to do, but this video is going to be more so around what I'm looking for. So the lower the yield, I think there's risk that comes with that as well. Like if you get an investment that doesn't have a high enough yield, then you're not going to be able to sustain your living, your lifestyle if you're not getting enough in dividend income. So what is that sweet spot? And I'm going to try to address a little bit of that here in this video. Okay, so we're looking at the assets under management. We're looking at the dividend yield. You can look at the historical returns, right? This is the performance of the dividend, of the investment, the total returns. The expense ratio is probably the most important thing that I look at. This is the cost that you're going to be paying for the ETF. All right, the next screener that I'm going to share with everybody that I use is from etf.com. etf.com is great for all things ETF related. And what you can do is you can go over here to etf.com, go to Etf Screener and database. And what you can do is you can filter based off of, you can get really granular in your search here. For example, you can search, the fund basics, the expense ratio, the assets under management, the issuer of the ETF. You can take a look at the performance. I really like this because it breaks it down really in detail, 1 year, 3 year, 5 year, 10 year. And, the list kind of goes on and on. Another thing that I like is the fundamentals. You can look at the PE of the ETF, right? The dividend yield of the ETF, and you can really get into the weeds as much as you want. What I would recommend is really keeping it simple. But if you do want to drill down and see, okay, I want to get really into the nitty gritty. I want to get into the asset class, right? I want to get into fixed income sources. Like if you're about to retire and you're looking at more fixed income options, you can look at that. For everybody else, the equity section, equity asset class is probably going to be the most applicable. You can look at the performance. You can base it off of performance and really as many things as you would like. The third screener that I use here is from Seeking Alpha, seekingalpha.com. What you can do is go under the ETF section and go to Etf Screener. I really like this screener because it just visually for me, it's kind of more intuitive for just me personally. I mean, everyone is different, but I really like it because you can base it off of the key essential things. For example, I want to look at asset classes under U.S. equities. I want to have every equity in there, based off of this criteria. You could base the performance off of, the last 3 years, 12 months. I just typically keep it, average there with performance. The expense ratio, this is really, really important. If you just want to focus on lower expense ratio ETFs, you can do that. You can focus on the yield. The market cap, this is the assets under management, right? The larger the cap, the bigger the ETF, and the higher the dividend will typically be, not always, but typically if the larger the market cap. But what I look at here is I'm looking at the assets under management. I'm filtering this way. You can filter it by the expense ratio, right? This is based off of market cap of 500 and above. You could do it 1 billion, right? You can go as granular as you'd like there. The inception date, the issuer of the fund. You can take a look at the performance. You can look at the yield, right? You can look at how often the dividend is being paid. Is it being paid quarterly or monthly, right? A lot of people are big fans of the monthly dividend payers. One thing that I will caution though is be very careful with the monthly dividend payers. You see a lot of hype here on YouTube about, hey, the 5 best monthly dividend ETF payers or whatever, or stocks. Be very careful. A lot of people share those videos because they get a lot of clicks. People like to view them. They're interested in that. but really understand what you're getting with those. Okay, once you've selected the ETF from the screener that you're interested in, right? So you got the screener, you got all the filters based off of how you'd like it, and then you've selected an ETF that you want to drill into and really take a deeper dive into that ETF. So let's take a look. Once you've done that, then what I usually do is I go to etf.com and I type in the ticker symbol. And I pull it up here under the fund report and then click on that, and you're going to pull up this screen right here. And so with VYM, this is the Vanguard High Dividend ETF. It has also the overall rating through etf.com. I do pay attention to this. It's just kind of like, all right, well, that's good. I'm looking in the right direction, right? What you can also do is you can see competing ETFs. If you're like, hey, I absolutely love this ETF. This is my favorite ETF. What are some other similar or comparable ETFs? What you can do is then you can check out these other ETFs, right? It's like on Amazon, other customers that purchase this also purchase that, kind of like that. So I'm looking at the fund description. So VYM tracks the Financial Times Stock Exchange High Dividend Yield Index. The index selects high dividend paying U.S. companies, excluding REITs, so real estate investment trusts, and weights them by market cap. Okay, so this is the interesting thing. Every ETF is going to have a different focus, right? What you're going to notice, and if you've been following my channel, you probably have seen this in other videos, but every ETF does this a little bit different of the strategy behind how they allocate or how they hold the percentages of the holdings in the ETF, okay? I'm not going to go into detail and read the full description here, right? But if you're interested in an ETF, I highly recommend you read through the description, okay? The next thing that I'm looking for when I'm analyzing an ETF, I look at the inception date. How long has this ETF been around? I look at the expense ratio, okay? Very, very important. And we're going to touch on this towards the end of the video of how much this is actually going to cost you if you were to purchase this ETF, for example. Once again, the assets under management, right? We're taking a look at that. We're looking, this is something that's interesting that could be valuable for you. The weighted average market cap of the individual holdings in here is $130 billion. So this is a large cap ETF, right? Going down here, this is something that I take a look at, obviously, is the current dividend yield. Now, what I've noticed is if you go to Yahoo Finance, you go to Google Finance, you go to etf.com, Seeking Alpha, M1 Finance, you're going to get different dividend yields. For example, on Seeking Alpha, this is 3.6, right? So double checking different websites never hurts. This is not always in real time from what I've noticed. Just be aware of that. The next thing that I'm looking at are the number of holdings. How many companies are held in this ETF? Then what I'm going to do is I'm going to scroll down here. You can check out the performance history, right? You can do that. You can look at it here in table format, right? And what I'm looking at here is this is important. The top country. So this is just a United States ETF. This is important also for tax reasons. This is if you're in the US and you want to optimize your tax efficiency, this is a great one because you're not going to have any REITs, as we know, real estate investment trusts, which are also taxed differently, and this is just U.S. equities. Here you're just paying capital gains tax on this, which is the most favorable in the current tax laws in the United States at the making of this video. The next thing here are the top 10 sectors. And here you can see, okay, of the holdings in this ETF, this is the sector allocation and the breakup here. So you got the majority in healthcare, you have in consumer non-cyclicals, financials, and so forth. And it's fairly well diversified, right? You don't have any sector that makes up, for example, 25% or more of the overall allocation. The next thing here is going to be your top 10 holdings in the ETF. So in this ETF, you're going to have holdings like Johnson & Johnson, JP Morgan, Procter & Gamble, but also very important is the total 10 weighted holdings in this ETF equate to 27%. And if you're interested in learning more about, okay, the other holdings in here, what you can do is you can click View All, and you can see all the other ETFs that are in, all the other holdings that are in this ETF. And you can scroll down here and you can see, okay, you can see, the waste management is in here, right? You got General Mills, you got MetLife, and so forth. And you can see here that it falls off, right? You're getting very marginal exposure to these individual companies, though you're still invested into big lots, for example, but just with such a small percentage. That's why the big focus on the top 10 is such a focal point here. These are the majority of the companies that you're getting with this ETF. So really, in a nutshell, that's what I'm looking for. I'm looking for the inception date, the expense ratio, the current yield, the assets under management, the number of holdings, the sector weighting, the top 10 holdings. Those are really the main things that I'm looking for. All right, from there, what I do is after I've looked at all the information there on ETF.com, then I go over to seekingalpha.com and I want to look at more specific detail around the dividend growth of the ETF. So what I do is I go to Seeking Alpha, I type in VYM, and I go under the dividend tab and I go under dividend scorecard, your overview of all the essential information surrounding the dividend, right? And so the next thing that I'm going to look at is the dividend growth. How quickly is the dividend growing? Now, the CAGR, this is the compounded annual growth rate of the dividend. This is not the share price. This is just the dividend. And you can see the dividend growth over 1, 3, 5, and 10 years. If you want to go and take a look at the dividend history, I like doing this, especially when I'm looking at the growth rate over certain periods of time. So what you can do is you can scroll down here and you can see the actual dollar amount. There should be dollar signs, I guess you could say. This is the amount that you're getting paid based off of your share, how many shares you own per quarter, right? So, for example, if you had one share of VYM, you would get paid, 77 cents, for example, for that one share. If you go down here, this is what I really like to do, especially when analyzing kind of, all right, well, how has this ETF performed over time, in particular during the financial crisis. So what I'm looking for, and this is kind of the same for when I'm looking at individual companies, is I want to see how the ETF, for example, has performed during the financial crisis of 08 and 09. All right, the next thing that you can do, if you want to check out really the total returns of an individual ETF, what you can do is you can go over to this website. I'll leave a link in the description below. It's DQYDJ, and it's tracking the total returns of individual ETFs, for example. And you can run a simulation, for example, if you were to invest $10,000 on June 5th, 2007, what would your return, your total return, that's also including the reinvestment of dividends, what would your return be, right? And so what you can also do is if you want to say, all right, well, what would it look like if I had a monthly regular investment of $500, right? You can do $500, you can do $250, you can do $1,000, you can go to town on that, whatever your particular situation may be. And what you can do is you can calculate the return and you can see this is not speculative, this is actual historical return. And as we all know, historical returns are no guarantee of future returns, but you can see what the hypothetical value would be with this scenario. Invested $500, if you would have invested $1,000, right? Whatever it may be, and you can see the total return of what it would have been with that dollar amount. All right, the last thing that I want to do is I want to benchmark 3 ETFs. So let's say, for example, we went through our screener and we selected 3 different ETFs, and we went through the process of, what I just talked about, analyzing, pulling all the data and figuring out for ourselves, okay, would this be a good investment for me, specifically, right? Talking about, if you're in that situation, right? And so what I've done is I pulled 3 different ETFs. I pulled VYM, VIG, both of those are from Vanguard, and FDL. And what I've done is I've filled out all the information, for example, starting with the inception date. All 3 of them have the same year. They were created the same year. The 5-year compounded annual growth rate. Once again, I got this tab from Seeking Alpha, the expense ratio, their current yield, their assets under management, their number of holdings, their sector weighting. The sector weighting, this is my opinion of diversification, how well they're diversified. So this is just my mere opinion. And then lastly, the top 10 weighted holdings in these individual ETFs. So if you break it down, VYM has a pretty healthy 5-year compounded annual growth rate, has a decent expense ratio, actually a pretty good expense ratio. The only way to get a lower expense ratio than this is to go with like the S&P 500 from Vanguard or for example, with iShares, or I know that there's others, for example, with JP Morgan that have come out with really, really low, even in some cases, completely free ETFs. The yield, it has a good starting yield. It has good assets under management. It has 397 holdings, which is well diversified in my opinion. And the top weighted holdings only make up about 27% of the overall ETF, which I think is good. If you look at VIG, the VIG is the Vanguard Dividend Appreciation ETF. It has a lower 5-year CAGR, which I find very interesting actually. But it is what it is. It's historical data, all pulled from seekingalpha.com. Has the same expense ratio as VYM, has a lower starting yield, has 42 billion in assets under management, over 200 holdings in it. It has average diversification in my opinion, and it has the top 10 weighted holdings at 35%. The last one is going to be FDL. It has a good 5-year compounding annual growth rate. The big red flag for me is the expense ratio. It has a much higher expense ratio. Though the yield is higher, it has a higher current yield, the expense ratio is much higher. Has a lower assets under management, only has 100 holdings in it. It has poor diversification, in my opinion. And if you want to check this out while watching the video, go over to etf.com, type in FDL, and you can go down to the sector weighting, and you can see what I mean by poor diversification. Leave me a note in the comment section below if you did that, and let me know what you think, if you agree or disagree with me in terms of poor diversification for FDL. The top 10 weighted holdings is at 60%. So when focusing on, when just looking at these three, for my particular situation, where I'm looking to retire in 12 years, I want to retire and live 100% off of my dividend income, I would preference VYM. I would not preference VIG simply because of my investing goals of looking to retire in 12 years. If I had a timeline of maybe 20 years or 25 years, maybe I would consider VIG and would go that route. In terms of regardless if I would be investing for 20 years or 10 years, I would personally not ever invest into FDL. FDL has a far too high of an expense ratio for me. The expense ratio for me is the deal breaker. I would not invest into FDL. Okay, so let's go ahead and let's take a look at the cost of the expense ratio. I love simulations. I love hypothetical scenarios. Let's say, for example, you were to invest into all three of these. Let's say, for example, you invested $10,000 and over a 30-year time period, and it had an average of an 8% rate of return. That's also including dividends. So this is fairly, the 8% is pretty conservative. If you were to invest $10,000 over 30 years, no additional investment, the expense or the fee that you would pay for VYM would be $1,726. This would be the exact same for VIG because they have the same expense ratio. If you look at FDL with the same parameters, you would be paying in fees, you'd be paying over $12,000 in fees over a 30-year time period with just a $10,000 investment. Okay, so the fees absolutely matter. All right, now if we would take a similar scenario where we're investing $10,000 today and investing an additional $5,000 every year, every future year for 30 years with an 8% rate of return, with VYM and VIG, you would be paying over $7,000 in the fee to have ownership in that ETF. With FDL, with the same parameters, you'd be paying over $56,000 over that same time period. Okay. All right. The last scenario that I want to look at is not going to be applicable for everyone today, maybe in the future, but this is something that's important to start thinking about as you invest more and more money, as you save more, as you earn more and invest more. This is something that should be on your mind in the future if it's not already today. If you were to invest $100,000 today, or you did it 30 years ago, and you had a 8% rate of return, and what would the fees be with the expense ratios of the investments that we talked about today? With VYM and VIG, you'd be paying over $16,000 over a 30-year time period with an investment of $100,000. That's pretty substantial. If you look at FDL, with the same parameters, you'd be paying over $118,000 in fees. So the fees absolutely matter. The fees eat away at your total returns. Alrighty, everybody, I hope that this was helpful. Those are the things that I'm really looking for when I'm analyzing ETFs and that I'm going to have into my portfolio. Really, I want to highlight the important thing is understanding the fees, the impact that the fees have, as well as understanding your goals. Don't just immediately go for the highest yielding ETF in there. Try to understand what are you trying to accomplish, right? And don't overcomplicate it. That's something that I noticed when I first started investing is I tried to understand every single piece of information possible, and then only then would I start investing. You don't have to do that. And that's what becomes so intimidating for new investors. If you're investing in ETFs, it's important that you understand the basics, the fundamentals around what is important. And I hope in this video I was able to share some insight into just that. If you're new to the channel, I'd invite you to subscribe. If you like the video, and I'll catch everybody in the next video.